going out and African countries, continent and stuff. So, no, we've only got one. Anybody in it now, it's early. The boat ain't even in the water yet. So it certainly ain't sailed, but there'll be a few changes, I 100% think, but it's early days.
The regulation's coming. The reason why I'm asking this is Bitcoin has it's completely flat since last year.
Yeah, that's because of what's going on in the financial market, so the stock markets and stuff. I genuinely believe that. I know other people are strong in their opinions against that, but I got in back in last January and I watched crypto shit ton. I was back in 2016, and I was calling crypto was here forever. And it was like the industrial revolution of our times. But I came out and I went back in January of last year and bought 10, 15 different coins, trebled, quadrupled my money, moved it around and stuff. But then I got into AMC early January as well. And then that took all my focus because of learning about market exempts and everything.
You think that this is going to happen again within the next, we'll just say 2 years?
Crypto?
Yes, sir.
Yeah, I was looking at the end, sort of October time. I got out in May before the crash, or it dropped, and I went back in, not as much. I weren't working, so I took some money out and was paying bills and that. And then I came out again 1st of November, 2nd of November, before it dropped again. And without anyone telling me, that was just through sheer DD understanding both sides, so crypto and AMC, GME, etc., and what was going on in the stock market. But there was no way that people with money wasn't using crypto. You've got the SEC saying they want to regulate, etc., etc. Fucking start with the market. I mean, look how bad you are with the market. Now you want to go into the crypto, which was meant to be deregulation and nothing to do with the financial system. That was what Satoshi first wrote the paper about and released it because of the crash. So, all right, if the SEC is going to come in, can't stop it, but
they're using that unregulated gun to your head, though. You know what I mean? So it's a catch-22. You kind of you can't write the argument off, is what I'm trying to.
No, 100%. I do look at all of it, but because that boat yet hasn't sailed, it's not even in the water. There's still time for it to pan out, and if you go back to the Industrial Revolution and how that started, you had haters, knockers. You had people that was using horses, didn't want to use trains. You had, the railways being built. You had all the corruption going on there. You had the money men moving, JP Morgans, etc. It goes again and again and again, and crypto's no different, but they were slow on the uptake this time. So originally it was the nerds, and then a few people that knew the nerds got involved. The pizza story at 10,000 Bitcoin. So it was really nerdy way back in the beginning, but I know people that were in when it was stupidly cheap.
It's still nerdy now, bro. But you got so not to shill something, right? And I'm sorry to interrupt. This isn't like Spaceballs and Twitter, so it's hard to like raise a hand or something, right? So
yeah, so I do it all the
time. Forgive me for my sins, but like I watched Cardano, right? So I got into crypto. And I had been kind of following it. And when I say kind of, I have corporate finance degree. Like I understood crypto existed, for as long as it did, but I didn't ever get my feet wet, so to speak. But I saw what Cardano was doing. And again, I'm not trying to shill anything, but the wall
it's the team behind it.
Africa and African nations, who has the last mineable resources left that isn't going to cause a kinetic war necessarily? Fucking Africa, man. So I was like, my money's on fucking Hoskinson then, because he's actually putting in the footwork, going to these countries, meeting with these diplomats, business people, not just the governments. He's meeting, if in many cases, not even the governments, just fucking people.
Well, if you go back to the original question regarding crypto, I'm a nobody. So, pinch of salt, whatever I say, whenever I say it, pinch of salt, go and look at it and fact check it or whatever. But if you look at crypto, for people who think they've missed it, I do think, and I haven't paid attention for the last 3-4 months, But I do think that this last year, 15 months, so October time of last year, I was still looking at possibly a super cycle. So if you look at all the crypto experts, and I ain't going to name them, but if you look at the YouTube channels and other areas where you can get access to this info, they do know their stuff, but they wasn't equating it to the financial markets of the stock exchange, etc. And
We're
that
in
to
their
me
crypto
was
winter. We're in that crypto winter that they spoke about, right? But
yeah, and there was
these
talk.
rascally rabbits don't realize that Wall Street has fucking commandeered your ship and is steering it right into the fucking markets. Everything has been correlated for, I would say, about a year before meme stocks even happened. I saw correlation starting to maybe, be a thing.
I saw it for about 2 years from
2 years.
how long I was studying it, but I mean, that's just what I've
I mean,
been
it's wild though,
following.
right? To see that, because it's supposedly not supposed to be that way.
Can I ask you guys?
Inflation
Can I
rises,
ask?
it should have skyrocketed, right? And it didn't. So that should have paused people, but it didn't. You saw the Bitcoin maxi saying buy the fucking dip all winter, and I was like, November was the top. I sold about 14 days after what the actual top was, so a couple weeks after. They're fucking crazy. You know what I mean? Go ahead, buy the dip, but you're gonna lose more money. Like you could have bought cheaper if you wait, because look what we've been arguing and advocating about for 16, 17, 18 plus months now. More if you're a GameStopper. More if you're a GameStopper, right? So it is fucking ludicrous to think that they're not pointing an unregulated gun at us. So it's weird. Crypto's in a weird place, but dude, it is not maximalized as far as who's going to buy in. You have so many main streeters, so to speak, that will still buy into this thing. And they're literally waiting because they know more than any of us do when that dip is kind of come, like not more so when, but like what it's going to look like, or what it, how low is it going to go?
I don't want to cut across you, but this crypto is a conversation you can have for months and months, and I hope those involved at another time will do it. But obviously, Boss is ready to go, so I think we need to go live.
Oh, sorry, Boss. Yeah.
No, it's all good. He's cool.
Welcome to BossBlunts Think Tank. Thank you very much for Wolfie, Randall Cornett, Queen B, Mishler, D, everybody who came up and joined us today. Cash Money. Appreciate you guys. That was an excellent introduction, whether you knew it or not. The people are absolutely fucking fired up to hear you guys. Wolfie for fucking president, my man.
I vote for Wolfie any day.
You got my vote.
All too kind.
100% Wolfie. I got your back, fam. I do this
so goddamn rich.
Thank you, my man. Thank you. We're all in it together, looking after each other. It should be about.
Okay, 3, 2.
It's supposed to be a world family, man. If we're ever going to do the things we need to do, this
rich.
fucking way.
As long as I get a crazy uncle, I'm fine with that.
Hey,
Someone's got to
be one of those. I'm good with that.
That scares them. You should all know it. That scares them. 10 million people when this play's finished.
And they're so stupid to give us time, bro. So stupid.
I don't get into the psychology much because you don't really get a chance, but psychology for me is in people and strategy. It's something I feel I have experience in. And at 50 years old, I've been watching mainstream media and the games that banks and that have been playing. So I'm certainly not an expert in the intricate details, AMC, Bigham's, BossBlunts and stuff, but I can certainly join the dots up. But
bro,
it does scare them.
Decade of sales taught me it scares them, right? Because just doing sales in a competitive nature, like I do solar. I've spoken to you guys before, but like I do solar sales, man, and it's a psychological game when you got 100 companies to compete against.
Mm-hmm.
Exactly.
Especially in California.
What do you got to offer?
Yeah, and it is being truthful. honestly, that's what to offer them. Because 99% of these guys are fucking greedy, and they'll lie to get a deal and move on to the next appointment. Great.
They're learning the hard way what hard-working people, the working class, actually are about. And when we've made our minds up, we're not stubborn. We just won't be bullshitted anymore. Yeah, we're awake enough. We're trying to wake other people up and stuff. We're not telling them to buy this, buy that, but we're saying, look, you need to look. You know, the mum that gets up early in the morning, sorts the kids out and goes and does 2 jobs. The dad that only gets Sunday off and if he's lucky gets a big bit of chicken.
And
these are real people and they need to sort that.
At least pay attention to that. You don't want to be what your old man has had. Like, he doesn't want that for you. He wants better.
Nick, I don't know if you said it, but what I do for a living is sell basically leads to insurance and solar companies, et cetera, et cetera.
Okay, yeah, it was me. Yeah. That's cool, bro. That's cool. We should talk.
Hey, can I make a can I make a shout right quick? And the only reason I'm doing this is because the person I'm not gonna name them by name. I'll name them by their tag in our Discord. But Flightman 20, I think it's 2012, 20. Yeah. I just want to let him know we here for him. Whatever you need, bro. Talk, holler at us, bro. We still here for you. All right. That's all I want to say.
Is Boss okay?
I know.
He's
and then
coughing up a
what I
gold
was about
watch.
to say was, is it Boss? We don't need you dying anytime soon. We still need you alive.
That thing, man. You're supposed to puff pass, brother.
Ain't the water in the bomb.
Kids are doing
might
it
be
these
old,
days,
I
man. It's
remember
all the
them
rage.
You know.
That's the first time I've ever heard him cough.
I was gonna say, at least
hey, bro, you late to the party, fam.
Yeah, where the fuck have you been, man? I'm always coughing up a storm over here. Shit.
The funny part is this ain't even the worst one.
No, definitely not.
The other one he did, he literally turned himself off. Like he left.
Those are the ones where like, all right, I need to chill. I need to go sit down for a second.
You know how high he is after that?
Right. All we know is we saw him disappear off the Discord. And I was like, is he all right? Like, yo, blink twice, man, if you need help. Like,
man down, man down.
Yes, hi, my Vix.
Yeah, no shit.
Tell you, Vic's had a good day today.
Hey, James, you got a special treat for us?
Someone may not have heard that, but that's all right. What you're looking at here on my screen, I'll share it on the Discord as well, so you guys can take a peek at it in the think tank. This is the worst NASDAQ sell-off since 2008. The absolute fucking worst since 2008 is here. This is the most global rate hikes since 2008. The biggest housing bubble since 2008. The most institutional trading since 2008. Worst consumer sentiment since 2008. And the largest recession stock outperformance since 2008. Therefore, with our 11% probability, historical probability of a soft landing, there's a, 8 out of 9 chance that the Fed's fix of inflation is going to wreck our overinflated economy, the real estate bubble, and everything else, every single other problem that you see compounded in our financial markets, from short squeezes on meme stocks to silver to OTC and pink sheets. You're going to see things that you've never seen in your life before.
boss.
And there's
Turn
an
your mic up.
11% probability. I'm sorry, Wolfie, but there's only an 11% probability of historically having a soft landing. And 2 of those times were in the 80s and in 1994, after record increases of rates by Volcker and an extremely strong recovery of an economy. And then after that, it was in the 90s when basically Clinton and company came along and changed all the financial regulations to give Wall Street even more power. Go ahead, Wolfie.
Yep. Turn your mic up, boss. They're saying in the chat on YouTube, I can't hear you.
Really? You having trouble
Yeah,
hearing
you're
me on
about
YouTube?
20.
You gotta be fucking kidding me. Oh yeah, there you go. Is that any better? Yeah.
Better.
Appreciate you guys. That should be
Yeah,
better.
I'm just
right
looking
there.
at the chat.
Thank you very much,
Sounds
Wolfie. I
better to me.
appreciate you. Awesome.
Yeah,
All
sounds
right.
better
Yeah,
than me,
you're
boss.
right though. They removed the Glass-Steagall Act.
Remove the
Well,
what?
Glass-Steagall was a big event for sure in that regard.
Take a look at what I got here. These were consumer inflation expectations during recessions. Can't see, take a look at 1982. During the recession, consumers were expecting inflation to rise, even as it was lowering. In the 90s, as inflation was at a fraction, maybe about half of what it currently was, consumers were expecting this kind of inflation. And now in the 22s, in the 20th century, consumer inflation expectations are the same as they were in the 90s when inflation was at around 5 and 6%. We're currently pushing 8.7%. This is the University of Michigan Index for Consumer Inflation Expectations, and it's currently sitting around 5%. That's the same thing, the same level as the last 3 public expectations of recessions since the 80s. What does that mean? It means that people have no fucking idea that they're in a recession. Period. Period. Look, that's what it fucking means. And if you've got a better answer, somebody, by all means, jump in here and give me one, you know?
Well, I'll add fuel to your argument.
Go ahead.
Wall Street does one thing. They price in these kinds of events, right? And they're starting to do that right the fuck now.
Thank you. I was going to disagree with you until that last sentence. Say that one more time for the people in the back, Randall.
I'm good at that, brother. I'm good at that. I'll set you up for it.
Go ahead, brother. Say it one more time for the people in the back. No, Randall won't say it.
Sorry, no, man, it was me. I'm dealing with dogs.
Sorry,
I'm sorry, buddy. I'm here just fucking trying to.
Okay.
I had to mute
Randall
one stream because
and
I had you echoing all over the place.
My apologies. Nick.
Yeah,
This is
this
the
is
echo
Nick.
chamber, baby. It was good.
This is Nick G.
Oh, thanks, Nick.
been a
You know
while.
what? You guys both sound a little similar over the Discord, so my apologies on that. But yeah,
Oh, you're
welcome
good,
back
bro.
at Solar on at Goad Solar, GOAD_Solar on Twitter. Make sure you check him out.
I love you, brother. But yeah, no,
man.
you're dead the spot the fuck on, brother.
And if you guys need solar panels in California, contact my man right there, Nick G. Oh man, we can't read the article. Ain't that a shame? What does this state anyways? Because you know what? I already know what this says. I don't need to see this shit to know that Lehman Brothers filed for bankruptcy in 2008. The American economy was expected by the Federal Reserve to continue to grow despite the financial crisis that we saw, even while Lehman Brothers was collapsing. The transcript from Federal Reserve officials the day after Lehman Brothers filed for bankruptcy mentioned inflation 129 times and the word recession 5 times in that one document. And this time they're making a much bigger mistake. They're raising rates. Meanwhile, they anticipate a global meltdown. The Federal Reserve has to create this global meltdown. Check this out. I just showed you guys this a moment ago. Look at the Hang Seng in 2008. In 2008, it reached the exact same level that we're at now. And we've got a long way to go as you're watching Chinese real estate developers get swallowed up almost every single day. And more of them get suspended from trading in China, in America, and around the world. Sooner or later, they're going to go bankrupt and they're going to default because they're already cheating bankruptcy laws, as proven by Dr. Marco Metzler, a former Fitch Ratings analyst, that has shown us the special purpose vehicles used by the BlackRock and the Federal Reserve and all these other banks to prop up, use our money to prop up these Chinese real estate debts. And then they use our pensions and 401K's to go in further and buy these emerging market ETFs. That further props up their shitty collateral. They take that collateral, they take margin on it from their the DTC, and then they short stocks like Bank of America, for example, short stocks like AMC and GameStop, and silver and gold and other precious metals like they've been doing for many years now, in order to manipulate markets and keep themselves from going insolvent on their trillions and trillions of dollars, hundreds of trillions of dollars in derivatives liabilities. Pretty soon you're going to see the Hang Seng do what it did back in 08 and then some, in my opinion. Look at real home prices, guys. Through the fucking roof, all the way through the pandemic. They crashed after the 08 global financial crisis, but what did the Federal Reserve do, guys? You know, Randall, Nick, anybody feel free to jump in. Cash? They jumped in to make the money printer go burr. Burr.
Oh yeah, the They will still find out how much they burned today.
Yeah.
That's the easiest one I ever heard.
We already saw housing sales in March completely deteriorate from their February numbers. I forgot the exact amount off the top of my head, but if any of you guys remember it, Pam the Trader, any one of our awesome mods over here can remember, just drop me a note. Appreciate you. Oh, sorry about that. We've got a lot more than just that. You want to see what kind of shitty state we're in? Oh, we can do that.
Let's do it.
This is the Chinese Yuan. Look at what happened in 2015. Stair step, stair step, stair step, stair step, till the moment where it loses almost all its fucking value. Sorry about that. And we're kind of, look, it looks like up here we had a nice little peak and we began a stair step. It looks like we're kind of doing the same thing at the moment. And take a look at this volume here. It's the ROC. I think this is the rates of adjustment, but I got to confirm for exactly what. But we're seeing the same oversold status as we did here for it to level off and then just drop again, level off, drop again, level off, drop again. And it's kind of very similar to what you're going to be seeing on the NASDAQ here.
Have you seen what Ray Dalio has talked about when it comes to world reserve currencies and historical time frames?
Go ahead and elaborate.
That is exactly what we're probably going to see happen. You know, and we've already started seeing the dollar kind of diverge compared to other currencies in the way that these guys have been arbitrage trading for a while, right? So it's going to get interesting.
This year in August of 2015 was basically Janet fucking Yellen. When she was head of the Fed, they planned a 25 basis point rate hike in September, which caused the Chinese yuan to implode, and it caused a chain reaction, a crash of global risk assets. It's a lot of people call it a smash crash, especially, and this time around, the Feds have fund futures have priced in basically 2.5% of basis points and 1.75% of rate hikes between now and July, which is 7 times more than we saw in 2015. 7 times the increase of race, 7 times the rate of increase for the interest rates when you compare the United States dollar with the Chinese yuan. It's going to cause a further devaluation. And being that it's 7 times more money, you can probably guess that this is going to be multiplied several times over, making this look like a fucking walk in the park. And this is global risk assets, not just the Chinese yuan. That's something that you have to keep in mind. And take a look at, except this time, what do you have going on in China? Millions and millions of people are locked down in Shanghai. China COVID-19 lockdown policy. They've got
production shortage.
Yeah, Wall Street has been downgrading Chinese GDP all year, and it's now currently estimated to be at around 4.5%, and that's going to be a lot fucking worse than that, if you ask me. A lot worse. You can see it everywhere. You can see it everywhere. Check out the Washington Post. Everything's halted. Shanghai shutdowns are worsening shortages today at 6 a.m. Look at just ridiculous things like, for example, air fryers are stuck in factories, warehouses, and ports where shutdowns have stalled millions of dollars of inventory for Yeti Houseware, a family-run businesses. So that's just an example of how it's affecting one business in LA. And take it from somebody in logistics. I have a small logistics company. We do freight brokerage and trucking nationwide and internationally. We're in for a world of hurt. A world of hurt. An estimated 373 million people, 1/4 of all of China's population, has been in COVID-related lockdowns in the recent weeks. This is government-sponsored supply chain issues. Meanwhile, steamship lines are taking on record numbers of blank sailings. Do you know what that means? Check it out. Let me just Google it for you so I can pull up an example, so you don't have to take it from me.
It means the supply chain is really fucked up.
Mm-hmm. What happened during 2019, just a couple months after the Federal Reserve had to bail out the reverse repurchase program, the overnight lending program to the banks and bail them out to the tune of billions of dollars every day. Back then, Asia-U.S. carriers to blank record post-CNY sailings. Trans-Pacific carriers through mid-December announced New Year blank sailings that far exceeded the average number of canceled sailings known at this point each year for the past 7 years. Carriers canceled scheduled sailings when cargo volumes are trending lower and forward-looking bookings also appear to be weak. Currently, aside from that, these companies are also sending out ships empty or canceling them entirely because they're not full enough. A lot of times they're sent out empty so they can run at a loss. And they would rather do that because it raises the price for the next ship. So it artificially pumps the price, much in the same way that De Beers Diamond Company withholds the supply of diamond. It's the same thing that steamship lines in China are doing with our supply chain. And again, I deal with ocean containers, I deal with trucking, I deal with hot shots, I deal with full truckloads and LTL every single fucking day.
What's it do to fuel? That's another component, right?
Well, let's just say that today, Russia eliminated Poland's gas. They turned off the motherfucking natural gas and oil taps because Poland didn't pay for their oil in rubles, as Russia demands. Does Russia care? No. because they're selling more than ever. Russia is selling more than fucking ever. And America continues to buy it. Believe it or not, America continues to buy it, even if they're telling you they don't. Check out what happened here. Look at the invasion of Crimea and the Ukrainian invasion. Look what happened to commodities prices. Look what happened to China's GDP growth. Look, this is 08 right here. Right, 08 through 09, the crash. As commodity spiked, the GDP dropped. Commodity spiked, the GDP dropped. Crimea invasion. Ukraine invasion. America and China are in the middle of a proxy war. And Russia is in the middle of a strategic operation / attack on NATO presence in Ukraine. And let's just say they're probably going to take out Azov and a lot of innocent people. Unfortunately, a lot of the Azov militia are fucking Nazis. And unfortunately, a lot of innocent people are going to be killed in the process. It's a really tough situation. We have to look at it from all angles. The Ukrainian invasion will further cause commodities prices to skyrocket. Look at wheat. Look at what happened to oil, and with a little dump, and we're going to have another pump in oil coming very soon, in my opinion. This is the largest divergence between Chinese GDP and commodities since the 2014 invasion in Crimea, followed by the largest drop in oil prices since 2008, from over $100 in 2014 to $26 a barrel in 2016. The only thing that has turned the markets around since 2008 is the Federal Reserve and the printing of fake money. Every time in 09 and 11, 15, 16, 18, and 2020 that the market began to crash, the Fed moved from hawkish to dovish and bailed the fucking markets out. They cut rates, they quantitative eased some more, they paused rate hikes. So let's take a look at when will, let me give a big shout out to zensecondlife.blogspot.com. When will the Fed policy reaction cause a panic? They created a chart that is pretty much a hypothetical chart. You know, let's just use that word, because we don't know exactly when the Fed will panic and when they'll give up. In my opinion, probably it'll look something like this. This is the S&P 500, the weekly chart with Fed policy reactions.
I'll see it, boss.
Take a look at that. The market at 41.75. What did we end the spot? What was the S&P 500 at today? I forgot. I know it was a crazy negative 3.5% day, negative 3%. We ended up down 2.81% at 41.7520. There it is. What we've seen is just the tip of the iceberg, in my opinion. The S&P 500's got a long way to go. I've got 250 SPY puts and 150 SPY puts, and I think that they're probably both going to go in the money. Yeah, I said 150. It's okay if people think I'm a little crazy. I don't really fucking care what people think. But I will say that I know what all of this points to, and I can read the writing on the wall. And little by little, we'll probably have a reversal of what we had here. They're definitely trying to prevent this. Why? Because at this point, what kind of quantitative easing could the Fed possibly do with our overinflated fucking cash to stop a financial collapse? At some point, the plunge team's going to lose control. At some point, hedge funds and banks and market makers are just going to say, I've had about enough, and it's time to let certain heads roll and sell off certain assets, close off some positions. Melvin Capital, anybody? This is a fucking joke. This is a fucking joke. 6.5% in the past 5 days. And it's really still overvalued as hell. we're going to see movements down to under 3,900, and the Fed's going to calm their hawkish tone a little bit. We're going to see moves down under 3,000, and they're probably going to stop hiking rates. Inflation will then come down a couple of percentage points, maybe to the 5-6% range, and it will, within the next month, continue to rise again. It would force them to restart quantitative easing and cause an extreme panic. If we do go back down under the 2,000 range, which the actual, in my opinion, if you remove the Fed's $9 trillion balance sheet, and the ridiculous amount of quantitative easing, we should be well under the 2,400 range on the S&P 500 right now. We should be nowhere near the 4,700 range as far as actual liquidity. Once global margins begin, central banks will have no fucking chance to stop it, and shorts will have to cover. Funds will be liquidated. Millions will go broke. And probably millions will also become rich. Make sure you're properly hedged. Make sure you're properly hedged, because you guys saw what happened with nickel. Cash Money, you got anything to say about the precious metals market, particularly what we think is possibly coming next?
It's the beginning of what's going to happen to everything else. Just another area that has been disclosed or shown.
Squeeze after squeeze after squeeze, right? What's coming next? Yep. Zinc. Zinc is possibly coming next.
Zinc.
These metals that we need, these base metals, are going to become harder to find. They're going to become in higher demand, and we're going to need them for wartime efforts, construction, and all sorts of other manufacturing. That's why nickel squeezed before other metals and other precious metals, because of its industrial uses and the bad short bets on London Metals Exchange.
They're shutting down the LME. Nobody wants to play in their bullshit anymore.
London Metals Exchange is owned by the crooks in Hong Kong, the Hang Seng. And they recently reversed over 6,000 trades in one day. And the nickel market was shut down, and trades between $50,000 and $100,000 a ton were reversed. If you had made $1, if you made $1 billion, if you made $100 million, they took your money away. And they said, we can't really afford that, so we got to reverse our margin call. Therefore, we got to reverse your trade. London Metals Exchange was forced to shut down nickel trading for the second time in under 2 weeks. This was on March 16th. We discussed this then. Look what they say. They say that the effects of Russia's war in Ukraine have been widespread, causing instability in European energy markets, pushing global agriculture producers to their limits, and leaving Americans paying record high prices for gasoline. The London Metals Exchange saw a computer glitch halt nickel trading for several hours on Wednesday, as the exchange said it would cancel a small number of trades that occurred below its newly stated 5% change in daily price limit. That small number of trades was almost 6,000 trades. And that was billions and billions. It's estimated around $6 to $8 billion in trades were reversed. $6 to $8 billion in money was stolen and given back to the people that lost it. It was stolen from the people that earned it on London Metals Exchange. And now, nobody is going to LME. LME is giving up silver and futures trading come July. Is that right, Cash? The squeeze in nickel pushed up the price of was pushed up.
Yeah, in July, yep.
It went up 250% to over $100,000 a ton. And short sellers that were backed by JP Morgan, Chinese oligarchs, said, I'm not paying. I don't have the money to pay you, JP Morgan. Either fuck off or you're not getting paid. And JP Morgan made London Metals Exchange reverse the trades. Most likely, allegedly. I have no proof on that. Other than, why else would it happen? Also, London Metals Exchange didn't want to take that kind of a loss because they knew that they don't have enough collateral to sustain a multi-billion-dollar loss, a huge, massive loss due to the short bet taken out. Anyway, I digress a little bit here. When the FUD...
Well, and
Go ahead.
I was going to say, and JP's got its own problems with equities. I mean, just look at what the Carvana debt is going to be doing to them. They can't get it off their docket, man. They can't get it off. No one wants to take it.
Absolutely not. Take a look at what you got here. When the Fed reinstated quantitative easing on Sunday, March 15th in 2020, the S&P opened limit down. And March 16th, 2020 was the biggest down day since 2008. All the day session circuit breakers were triggered. This time is going to be much, much worse. By the time the Fed makes their move, the market will already be in full panic mode. The majority of investors are already understanding that the market is fucked, and they're just trading accordingly. The others are perma bulls that will probably get caught with their pants down.
Panic will ensue.
Mm-hmm. Panic will ensue. People will see the Fed's reversal as confirmation of a recession, which is exactly what it's going to be because they're always behind the fucking curve. And as we've seen by the consumer inflation expectations during recessions, consumers have no fucking idea when they're in a recession. Consumers are dumb as fuck. That being said, when the Fed itself panics, they're going to turn our bond market into a Japan status. And the stock market will eventually find a bottom, which can be traded. In 2008, it took 4 fucking months. 4 fucking months after the crash. We haven't even gotten to the crash yet. You see this? This is this tiny, from all-time highs, this tiny little thing here. Let's just say that's just a little itty-bitty hiccup as to what's coming on this ridiculous overvalued market. Let's take a look at the CAPE PE ratio on the SPY or the S&P 500, whatever you want to call it. We'll go to the S&P 500 for the Shiller PE ratio. Holy shit, it's off the charts. What you're seeing here is the overvaluation accounting for inflation over the last 10 years. The only time it's been higher than it currently is was obviously a few months ago. In January of 2022, we began our descent from the all-time highs for the most part, and that's the only that and 2000, the real estate crisis, was the only time that it was that high. And we've got a long way to go. Differences here: our economy is shit. China's economy is shit. Our supply chain is shit. Our dollar and our bonds are shit. I'm talking about the United States dollar, United States bonds. And global risk assets are ridiculously overvalued. There's no more spring. There's no more suspension. There's no more trampoline. There's nothing to bounce off of. It's got to hit rock fucking bottom and flat out.
Yeah, no more liquidity.
Exactly. Check this out. What do we have here? It's the Nikkei. What nobody will say is that the low in 1930 was a tradable low, but it was not the bottom. So what came after the 1929 stock market crash was not the bottom, it was just a low. And they didn't exceed the all-time high again until 1955, over 25 years later. Great. Great. This is the Nikkei right here, and when you think about it here, charts are looking really bad, man. Every single market is extremely overvalued. Here's the S&P 500 PE ratio, already tanking, but look at what happened in 2008. You know, look at what happened in 2000. It's got a long way to go still. It's got a long way to go.
Those charts you showed earlier, those didn't have a 2008 mortgage-backed security crisis that never got dealt with that compounded to where we are today. Is that fair to say?
Pantheon,
Thank you.
I'm so glad you brought it up. So glad you brought it up. Go ahead, brother. Tell me more about the mortgage-backed securities and the collateralized debt obligations, man.
Well, before we jump into that, let's just say what we've learned over history, guys, is that the hedge funds start to have problems that we can see materialize before the governments ever step in to do anything about it. The governments are always reactive. The Fed, all of these things they're going to do are going to come late in the game because that's when we retail find out what's going on. What's happening is you look at the hedge fund industry, and that's a good precursor at least to see what's coming before it becomes a bigger issue. And what have we seen, right? We've seen hedge funds start to disallow their own people to pull their money out. We've got other hedge funds completely closing up shop because they're not going to hit the high water mark, and they're afraid, or at least what they publicly state, they're afraid that's going to have a problem with their current traders staying on board because they won't be able to get their performance bonuses because of how much frickin' money they've lost. These are all indicators you see every single time that lead up to a crisis first before the governments act. And you guys have been all over top of that early on. But if you want to talk some more about 2008, we can certainly do that, my friend.
Oh, it's all game. It's all open, fair game. Make sure you guys check out Pantheon AMC on YouTube. Appreciate you joining us, my friend. Take a look at the CAPE, you know, the cyclically adjusted price earnings ratio for U.S. housing, accounting for inflation, and the S&P 500 CAPE. You know, economist Robert Shiller is basically comparing these, and home values are closer to their record highs than stock values. When we say that this is, you know, that stocks are extremely overvalued, it's the truth. And the issue here is that hedge funds are directly over-leveraged in mortgage-backed securities and in collateralized debt obligations and credit default swaps and all sorts of other ISDA contracts and tranches of emerging market bullshit real estate, things like those companies in China that are defaulting right now. And what it leads to is that not only are they over-leveraged in stocks and over-leveraged in bonds, but they're also over-leveraged in real estate and rehypothecations of bullshit. And they're over-leveraged in their short positions. No, do you get the fucking point? Do you get the point? There's way too much happening here in national home prices, in stocks and markets that prove that they are extremely overvalued. And it is completely unsustainable because the Fed is no longer going to continue the massive amount of quantitative easing and amount of asset purchases that they've been doing in the past. They are finally beginning to slow down the QE. Thank you very much. Appreciate you guys. Diamond Hand Yams, thank you very much, brother. Appreciate your support. Be awesome.
I mean, the government can't even account for, you know, more than what 900 billion in just, and this is just the unemployment relief element to the pandemic, quote unquote, relief, right? They can't even account for $900 billion in unemployment relief. And there are now NBC News articles, probably litany of other resources you can go to find these things, that estimate ranges of anywhere from 87 billion to 400 billion went offshore to foreign criminals, and law enforcement is corroborating that. I mean, the government can't account for that.
Exactly.
And people are still going to look the other way with everything else going on. You know, wake up, people. Please wake up. We're not trying to cause you to freak the fuck out. We're trying to cause you to find a reason to fight for your future, because shit's about to tank again.
Look at what happened in 2008. Pantheon. Looking at Wikipedia here, they tell me that the housing bubble preceding the financial crisis of 2008 was financed with mortgage-backed securities and collateralized debt obligations. Did we not just say that, right? They initially offered higher interest rates, better returns than government securities, along with attractive risk ratings. While elements of the crisis first became visible during 2007, sound familiar? Are we seeing things now? Several major financial institutions collapsed in September of 2008 with significant disruption in the flow of credit to businesses and consumers and the onset of a severe global recession. Look at Americans' credit card debt in 2022. $856 billion as of the fourth quarter of 2021. That's a $52 billion increase from the quarter prior. Americans are in more debt than ever. Look, card debt showed hockey stick growth until the financial collapse in 2008 when balances fell from 866 billion to 660 billion. That's just a bunch of defaults. And we just saw that happen here in 2020. So this time when it happens, you can estimate that you could assume that the domino effect is going to be significantly worse than it was then. It's an absolute fucking mess. And what happened here afterwards? You know, when home prices declined steeply after peaking in mid-2006, it became more difficult for borrowers to refinance. And then adjustable rate mortgages began to reset to higher interest rates. And that means that the people, because tightening lending standards tightened, people were no longer able to refinance. That locked them in, and mortgage delinquencies soared. As of this month, we're seeing a heavy drop in home sales. And we're going to start seeing foreclosure numbers increase. Existing home sales slipped 2.7% in March. And that's down 4.5% from a year ago. Meanwhile, existing home sale prices continue to rise, and they're up 15% on average from last year. The prices of homes are also being artificially propped up by the mortgage-backed securities, as we stated, that are held and rehypothecated many times over, both with offshore bonds and American depository receipts and all sorts of other depository receipts around the world. Let's take a look here at housing. Sales fell in all 4 regions of the United States. New homes are a leading indicator, and when a contract is signed, it's, you know, an offer of demand. Let's see. Sales dropped 12.6% on a year-on-year basis in March for new homes. So it's more significant than just existing home sales, because you have to take in, here you go, seasonally adjusted, 8.6% from the Commerce Department here, April 26th, 2022. This article is only 12 hours old. At the same time, median house prices in March jumped 21% from last year. Man, that's fucked. And as you can see, volume on the market and number of homes on the market is increasing because it currently would take about 6.5 months to clear the supply of houses on the market, up from 5.5 months in February. So more people are selling their homes. Most likely, one, because the weather's getting nicer. So when more people are willing to move. But two, I think because a lot of people can see what is on the horizon here. I think that's really, really clear. Sorry, I didn't mean to ignore your chats, guys. Your comments are fantastic. Thank you, everybody, for your support. We truly appreciate you. None of us would be here if it wasn't for you guys' support. We're here to try to share the information that we found so far to help you make your own decisions. So you can go out and use that to help you decide what's best for you in the coming days. And I truly believe that we've got a long way to go down. Currently Blackstone, not BlackRock, but Blackstone is one of the largest owners of real estate here in the country. And they're continuing to hold up the price of houses. Meanwhile, Americans get drained and drained of their savings and what's left of it. Okay, I've shown you in the past, just in the last couple videos, that the Bureau of Economic Analysis has proven that Americans in the first quarter of 2021 had $4.26 trillion in savings. And then as of the last quarter of 2021, Americans had under $1.56 trillion in savings. So more than 65% of Americans' savings has been wiped out in less than a fucking year. Take a look at this old bat. Danny fucking DeVito. Look at this asshole. Thanks to Zero Hedge for posting this.
Nah, DeVito looked better than that.
Yeah, you ain't never lied, bro.
Thanks, Viv the Vegetarian. I fucking love it. The Treasury General Account absorbed a heap of cash last week as taxes poured in, bringing the Treasury General Account almost $1 trillion fucking dollars, the highest since May of 2021. The reserves at the Fed recorded the biggest weekly drop on record on the Treasury cash balances. Almost $466 million. Given these taxes were previously somebody's deposits, this resulted in the largest weekly decline in bank reserves on record ever in 1 week. $466 billion. $466 billion that is no longer going to be used and abused in the reverse repurchase program. That's not going to be chasing T-bills, short duration U.S. bonds. They call it the grease of our banking system. That's a pretty good one, Zero Hedge, I got to say. And we're in the worst bond route that we've seen in 800 years. I know here Zero Hedge is stating that we're experienced the worst bond bear market in over 50 years. In actuality, this is the largest losses in the bond market that we've experienced in this time frame in the last 800 years. Yes, 800 years ago, there were fucking bonds. I love it. And so what does removing liquidity at the bottom of the food chain do for companies that are, for example, hedge funds that are to be sacrificed because they've made bad bets on meme stocks? Look at the total return index for the year. We are on pace This is the second worst year for the S&P 500 returns ever. And if we go down just a wee bit farther, we will exceed the losses of 2020. And that will put us into the worst ever total return index for year to date. Or should I say, yeah, for year to date. That's right. About a year ago, Janet Yellen announced a huge drawdown of the general liquidity. Look at this liquidity injection. From February 10th to April 21st of 2021, $1 trillion of liquidity was injected into the financial system. Look at what happened to the S&P. Do you see how the Fed's asset sheet is propping up the markets now? If you don't fucking see it, what the fuck are you doing in the stock market? Go play with Legos. I think that was an absolutely fucking phenomenal article on the part of Zero Hedge here. Check out this 2020 April accumulation in the above chart. And it did not crash the markets due to the corresponding Federal Reserve stimulus, which equaled almost double that magnitude. Today, no such offset exists as we enter QT beginning as early as May 5th. How many fucking different people have to tell you the same thing before it sinks in? I'm not a financial advisor. Neither is Zero Hedge or anybody in here. And this is not financial advice. But if you've got people like Michael Burry and former Fitch ratings analysts like Dr. Marco Metzler and analysts worldwide that don't work at JP Morgan telling you what the fuck's coming, and meanwhile you've got guys like Marcel Kalinovic at JP Morgan, my fucking alter ego, over there, Bizarro World Marcel Kalinovic, Bizarro World BossBlunts, he's the perma fucking bull for JP Morgan telling people to buy the dip. Why the fuck would we buy the dip, dipshit? Look around. Meanwhile, the Fed is tightening and the Reserve is extracting cash at record levels. The U.S. Treasury is sucking money out of the system with his fucking giant vacuum. And the reverse repo has gone relatively flat since last December. We did come close a couple of times to having a new all-time high on the RRP, but that was at the end of the first quarter of 2021. And that happened because why? What were they cooking, guys? Banks have to cook the books at the end of every quarter and at the end of every year to make sure everything balances out. They have to make sure all their rehypothecations add up and they can meet their margin collateral requirements. Therefore, the RRP is always at its highest at the end of each quarter and at the end of each year during times of ridiculous amounts of liquidity in the market. I like this line. But as I try to remind myself, there are still people out there buying JPEGs in the form of NFTs for thousands, if not millions of dollars. These people have not gotten the memo. And that memo, in my opinion, is that we're going to be filthy fucking rich. Anybody want to add anything? Wolfie?
Yeah, we're gonna be so goddamn rich.
Burr, baby, burr.
Wolfie, is there anything you want to add to this, brother? Because I'm fucking tired of the Fed. I'm tired of the Treasury. I'm tired of the plunge protection team. I'm tired of the stock market and these assholes like Citadel and Virtue and Robinhood and Webull abusing and using our fucking money against us. I'm done with Bank of America and JP Morgan is the devil. I'm done with them. I've closed my accounts with B of A. I've moved on. I found my local credit union. I've moved on from fucking Robinhood and Webull and payment for order flow broker dealers. I've moved on from the Democratic and Republican parties. Neither one of them means shit. This isn't red versus blue. It's us versus them. The regular people versus the 0.1%. Plain and simple. What's up, brother? Jump in.
Yeah, did you ever see that article where the government is now scared that, Elon Musk bought Twitter, something about like freedom of speech, free
Yeah,
to speech or something like
absolutely.
that?
Hmm.
You think that's like a big win for us?
Elon Musk buying Twitter, in my opinion, is great. A lot of people are going to disagree, and I could give a fuck all if they disagree, but it's probably one of the best things that could happen because it's already owned by major corporations. So at least it's owned by, majority owned by a single individual like Elon, opposed to MSNBC and the Motley Fool and all these other assholes that are out there, using and abusing it. CNN, for example, that is pushing their narrative on Twitter, and basically, Twitter is using their algorithm to shadow ban and create little echo chambers to keep information from getting out to the majority of people. So yeah.
Have you noticed you're getting more followers?
Elon doesn't like the shorts. He knows from personal experience.
Yep.
Yeah, Elon Musk does not
Have you
like the
noticed you're
shorts.
getting any more followers?
I've noticed that like a lot of my posts are getting a lot more visibility. They're being viewed a lot more and liked a lot, shared a lot more over the last several days. I don't know if that's related or unrelated, but I have noticed that specifically.
To some degree, they're going to have to pull back the veil of bullshit, right? Because I don't know, man. Let's pretend all the data gets protected, all the trace lines with what happened with Twitter, internal to external. That motherfucker's gonna find the feds were in that database at some point in time, right? Like there is a litany of craziness that he could unearth by just gobbling this sucker up. So I don't know, dude. It's you're probably going to start to see a veil lifted. You're going to see hashtags become actually useful to use. Listen, I get more traction on Twitter when I don't even bother mentioning $AMC, $GME.
Right.
I just fucking tweet,
Right.
and it gets the traction.
Saying AMC or GME or Fed or anything along those lines just gets things shadow banned into the ground. I've noticed.
Immediately, bro.
It does not
Immediately.
become shared at all. And if it does, it's only to your immediate followers, and then it gets cut off from there. It's a very, very tight system and algorithm, the way that things are
And how many times do you need to rotate back and like or retweet something that you've done in the past, aka for me, every motherfucking roaring kitty tweet, for an easy example, right? Mm-hmm. Like it happens to all of us. I see it happen to BossBlunts posts. I see it happen to my own posts. It happens to the smallest accounts to the biggest. They understand that it is message focused, and that is what they wrote those algorithms to focus and hammer down on.
I'm not 100% sure about this, but I think someone just took out a smart contract on my life.
I hope not, brother. OG, stay with us, bro.
I'm serious.
Stay with us, OG.
No, I'm fucking serious.
Well, don't get too crazy on me, but we'll do what we can. We'll do what we can, brother. Have you taken your Adderall today, brother?
I don't take drugs like that, buddy. Like I'm not joking around.
I'm not joking around either.
What do you mean without being as colorful, I guess?
No, literally. Don't you take Adderall?
No, I don't take Adderall.
Okay, I'm sorry. I have you mistaken for somebody else. That was not meant to be offensive. Okay. Where's my friend Adderall? He's in here somewhere. It must be somebody else. Well, I hope not, bro. Let's say that much. I don't know if there's much we can do about that. You can come stay with me if you want. I got guns.
Yeah, man. I just want fairness, and I don't want to die. Like
we don't want that either. Trust me.
I want to die about this shit. Like
we don't want that either, bro.
That's why we're here, man. Like, no one's getting paid to do any of this stuff, you know? Like, it's people who generally not only care about their own plight, but see the truth through the fog of war, that it's everybody's plate that this falls on. We've lived that experience, right? If you're 30, 40, 50, 60 plus years old, you've lived that many times over, in some cases.
Mm-hmm.
You know, it's a matter of the people coalescing together, sharing the fucking data points, reviewing the history, and going over the fact that, look around, this left versus right shit, this, that, and the other thing crap, it means nothing. It means nothing. What matters is us talking right here, right now, sharing ideas, sharing plight, sharing whatever it may be, because that is how humanity progresses.
That's not an idea. Like, I don't know
first principle.
what the fuck happened. I don't know what the fuck was said. But, like, I'm 90% sure that there's a fucking smart contract on my life right now in the
How does that
fucking
work?
crypto space.
What does that mean?
There's probably someone that's gonna try and kill me.
How do we find this? Is it on the blockchain?
Yeah, it would be on blockchain.
Can you share it with me so I
What's the payout?
Well, listen, we're talking about something that's really troublesome. So we need to hold that conversation until after this video is done, yeah? Because this is going out. So let's deal with that. Don't go anywhere.
I got
Just
an
stay put.
idea for a new coin. It's called Kill Coin.
Yeah, let's just move on. We'll deal with it after. It's probably the most sensible approach.
I agree.
Yeah, if that's for real, we need fucking FBI or some shit.
Yeah, we need to look into
Well,
that.
let's take
after
it
the
back to
stream,
what
brother.
Boss was. Let's take it back to what Boss was saying. So,
Please.
you got Burry that's come back out and he's done tweets today. So,
did anybody see Michael?
You know,
Burry's
if we're going to
tweets today?
send the message, it is to each other. The message that we're now at a stage where the message we're now sending out is to the mums and dads that are out there too busy. They're working, got the kids. I know we've got mums and dads with kids and they're working hard that are already in the play. And thank God, 5 to 10 million of us. But there's an awful lot of others. So at the moment, I feel bad because I know what's coming and they don't. I drive, you know, like mentioned before in the film, they're driving around looking out the window. I still do it every day. So we need to reach the average Joe. We need to talk to the mums and dads that haven't got time. We just need to be in a position where we've got to keep it simple. So we're not telling you, you know, I'm talking to the mums now that have not seen any videos, or the dads that won't listen to their children, or friends that are saying, look, just look into this. So I owe you nothing and you owe me nothing. But 2 minutes of listening to somebody say to you, I don't want you to buy anything, but I don't want you to burn either. I don't want you to go through what I know at 50 years old I see happen in 2008 and in 87. I don't want people going through with the mortgages and the houses and the losing of the jobs and the fighting and arguing, that not having money to cover the bills and food prices going up and diesel going up. I just want you, the mums and dads, the uncles and aunties, brothers and sisters out there, know nothing about this play, to just take a look. Because there is simple things you can do as a hedge to maybe prevent some of that pain that's going to come. Because you look at the charts, they can't go up forever. It's never happened in the history. It always comes crashing down. And when it does, it's not going to be the super rich again that pay the price, or the banks. Some banks could go, some hedge funds could go, some prime brokers. Some new rules could come in. The SEC could finally start protecting the market because they're there to protect us. Your Congress people, but put all that on one side. If we're right, the Burries of the world are right, the experts, financial people that aren't getting on mainstream media or not given the chance to air their opinion are right about where we're heading, you can take a few simple steps that don't have to be hundreds of dollars or thousands of dollars to put yourself into a position by simply watching a few videos. Start checking a few bits of information out. Today, the housing market, I see on Bloomberg, I believe it was, in America, 4.7% of mortgages have now defaulted. Now, the last time we see this was 2008. And the film that highlights it, that most people have seen, it's a good film. It's comedy, it's got some good bits in it, it's got some real lessons. Well, they wanted 8%. If Mark Burry was saying if it went 8%, the whole housing market crashed. Well, today it's 4.7. And the same person who wrote that turned around and said, month after month, it's going to get worse throughout this entire year. Everything else bosses showed. So just keep it simple. You don't have to know about ISDAs. It'd be great if you did and you had time to educate yourself, but you don't have to be in this play and be an Einstein. You just got to know, what can I do that's simple that might allow me a little bit of breathing space if this does happen, if this market crashes, if the housing market crashes, if people stop paying their credit card bills, if people start returning the cars because they can't afford a payment, if you still end up with supply chain issues, all these things don't matter to you. What matters to you is what can you do? Something simple is a little hedge. It's being aware of what's coming, and you make your own mind up. There's plenty of info out there and people willing to say what's going on and try and educate you. It's up to you how much time you put in. But the moment it happens, I won't feel sorry. The moment it happens, I'm feeling sorry it's done.
Can I just say amen to that?
Of course you can, sir.
I just wanted to say it was pertinent to listen to the contrarian argument, because time after time, history will repeat to show you this, that it is a vocal minority, while we are 10 million, 4 million, whatever number you want to metrics you want to use, sorry. If you just coalesce that into just US data, we're not even 1% of this nation's populace involved in such plays that have been vocalizing this for 2 years, I'd say, easily at this point, and very loudly over the last 16 plus months. So it's at least put caution to the wind in the sense that it's blowing your direction, you know. Like, just listen to people. You don't have to agree with everything, but just look at the data points. You know, this is not the data that the mainstream media will ever feed to you. Because if this hit the fucking television screens, all hell would break loose, and they understand that. But they're not out here to benefit you, they're out here to benefit them. So the quicker we realize that and join forces in the sense of sharing data, sharing information, sharing arguments and stances on things just like this, the better off we are all going to be.
Hey guys, can I jump in here for a sec?
I would love it if you would. Go ahead.
So what Boss has up on the screen is a really important article that everybody needs to be made aware of. Casey Shaw dug this up, and he's shared this with us. And I want to make sure we have a chance to go through this here because people need to be aware of this. Be aware of the timing. It's regarding the Thrift Savings Plan, TSP. So if anybody...
That's fucked up, dude.
Yeah, if anybody's...
Sorry? Go ahead, man. I just want to say that's fucked up. Go ahead. Tell us. Explain it.
Absolutely. So the TSP site, if anyone has an account or you know somebody who has an account, you guys need to be made aware of this. We're talking about basically government workers or military. These are people that should not be screwed over. Not that anyone should be screwed over, but there's a change of service provider in this plan. And if you scroll down, Boss, to the dates on the bullet points, we'll see what's being planned here is on April 16th. There's other dates here that have passed us, but May 16th. May 16th is the last day to submit or access all forms, online or hard copy, which includes withdrawal, rollover, or transfer requests to beneficiary changes. What we're talking about is as of May 16th, it's coming right up, guys, you won't be able to withdraw, rollover, or transfer money in or out of that account. Now look to May 26th, the next bullet point.
This is a big
It's
problem.
the last day to make transfers between mixes of investments or change contributions within the plan. You're going to be locked in from May 26th until some point in the first week of June, where you will be, if you look at the words underneath the last bullet point, from May 26 noon Eastern time to the first week of June, account access will be 100% unavailable, but all invested funds will continue to reflect market changes during that time period. What does that mean? It means you can't do anything about what's in there if the market's going up, which would be a good thing, but if the market's going down and any assets in there are tanking, you can't do a thing about it. And just take a look at Everybody do some DD on this. Take a look at the options chain the last week of May. Take a look at the options chain the first week of June.
Yep.
Start looking at what's happening June 2nd, right? The vote from GME on the dividend shareholder split. Then you look at what's happening June 3rd, which everyone in this channel is familiar with, right? Executive Order 14032, I believe it is, comes into effect June 3rd. That is a lot of things happening. A stock split that cannot be covered by synthetics. We've got an executive order the next day. I don't think it's any coincidence that it's
That's
the
not
second
coincidence.
and then the third.
It can't be.
No.
It can't. When you showed me this just now and I saw these dates, I just like, whoa, like this is not coincidental. This means that people in the military will not be able to trade anything in their thrift savings plan. Is that correct, Pantheon?
That is correct.
That means if they have money invested in AMC and GameStop and other meme stocks and the stocks they fucking go up to $5,000, $10,000, $50,000 a share, they'll be unable to sell, right?
That is correct.
Right.
Well, are they not only worried about share locates at this point too? I saw some Mass Mutual information, and I don't want to spread FUD, but Nick, IBKR did the same fucking thing.
I don't mean to cut you off, but look at it this way. All of a sudden, there are millions and millions of military and federal employees that will be unable to sell their AMC or GameStop from May 26th through the first week of June. And this executive order, the one that addresses the threat from security investments that finance certain companies, people of China, will do what it did in January of 2021 and June 2021 again, most likely, because that's what it's designed to do, remove collateral from the markets. And that's going to cause margin calls again, just like it did then. And that's going to cause AMC to GameStop to run thousands of % year to date again, in my opinion.
Well, my fuel to that, and what I was saying was, you're already gonna listen, that is tantamount to me that's bullshit, right? You don't do that crap to your armed services.
Do you think they fucking care?
But
you're right.
No, they don't care, bro. They don't care, and I understand that. I get that, but they're already doing it to your European apes.
Oh yeah.
If my news feed that I was fed to me, and I both corroborated and checked with a couple other apes that I'm close with, IBKR and Mass Mutual were two funds that already said you cannot transfer out. If you own the European version of certain equities, aka AMC, GME, you cannot transfer them out. You can't do certain things with them. So maybe you can correct me on that one. I don't want to spread FUD. That's not what I'm on here to do.
I'm not sure.
We're already seeing the ramp up to this, right? We're seeing it ramp up to that very date.
This is a big problem. This is a big fucking deal. This is not an accident. This is not coincidental. This can't be. Pantheon, when did you find this? You and Casey Shaw found this shit, dude?
Yeah. That was Casey Shaw. He was on a live stream where somebody was asking a question. Why am I being restricted from making any adjustments to my plan as of a certain date? Casey looked it up and found this, and he's been spreading it and asking, can we all please share this information? It's important for people to know. And it could also be the flip side. If potentially, and I'm putting on a tinfoil hat here, guys, if toxic assets are switched over into people's accounts and things start dropping, you also can't react to it.
What's in the emerging market ETFs? They won't be able to cash out their 401k. They're going to hold their fucking collateral, their liquidity during the market crash while AMC and GameStop run. I bet, but I'm not sure. I'm not a financial advisor. Holy fuck!
I look at this three ways. First of all, how can you do it to the people that are there to protect us? I mean, in what world do you live that you could actually do this?
Look,
second point from this.
Yeah.
If they're doing this, we're all saying, we all believe what we believe, but I'm talking to the average Joe who's never seen this, or a military guy that puts their life on the line when called upon for us to sit and bitch on Twitter. But they're now being told they can't touch it. The second thing about it is, why would they not be able to touch it? Well, strategy. I'm running a country and I've got military personnel. I don't want them rich. I don't want them getting rich. I don't want them to be able to buy out their service or go and look after their family or retire somewhere. I want them exactly where they are because I need them there. slaves. If they end up being able to sell and it goes up to stupid numbers, 1901, there was a company that run up to $1,000 in 1901. We don't know what we're dealing with, but there's estimates of 20 billion synthetic naked shares. Well, if it runs up to silly numbers and these people had 50 shares, 1,000 shares or whatever, if that happens, they can't afford for people like the military to be on the receiving end of substantial amount of money, and they can then make choices that might take them away from where they currently are because they need them now.
I think people
And
need
the
to share
third thing
this.
is, for the people who don't know, I could be completely wrong. I bloody hope I am. I don't want to be right about that.
No,
but how the
you're right.
Can you do that to the people putting their lives on the line for you?
That's
for
exactly
everyone?
what they're fucking doing, man. How does it not make sense? This is all conspiracy now until it happens. When it happens, people will look back at this and probably say, holy shit, these fucking guys were right.
On...
Well, I'm sorry.
Listen.
Go ahead.
I'm sorry. Quick clarification on the TSP.
Go ahead.
I currently have it in the military. You can't invest in individual stocks, unfortunately. There's only certain indexes that you can invest in.
Right, ETFs and indexes,
you can
right?
change it to
that's the problem.
Large, mid cap,
right,
something like that.
I
but
understand.
You can't actually
but what you're saying
invest in individuals. So
is the same thing.
Not being to pull out obviously with stock because obviously
you.
some of those indexes.
I appreciate you, but here what you got to look
would
at.
skyrocket with AMC and GME going up, but regardless, with any kind of major crash, then obviously that would suck on the back end as well. So just want to get that clarification on that.
I appreciate that. Regardless, it's not about individual stocks because most 401Ks don't allow you to buy individual stocks unless it's like a self-managed one through certain companies. So that being the case, their money is in these large cap, mid cap, small cap, and all these other plans. They're usually named by year: 2025 retirement, 2030 retirement, 2045 retirement, etc. And they are individually holding all of these various ETFs. For example, the U.S. listed Vanguard FTSE Emerging Markets ETF Index Fund, which has $72 billion in assets as of January 6th of last year, with 43% exposure to the Chinese market. Since the executive order was first announced, said Vanguard, they've been keeping client-facing associates prepared for responses. Vanguard will fully comply with the executive order and will continue to monitor the situation. BlackRock has iShares Core MSCI Emerging Markets ETFs, which had about $70 billion in assets and a 36% exposure to the Chinese market. The fund had 1% exposure to blacklisted Chinese securities before the changes announced by its index, according to calculations from Morningstar data. That's just from this one ETF, okay, or from this one emerging market fund, not from any of other Vanguards and BlackRocks and all the other banks' emerging market funds and ETFs. This means that they're probably going to be holding this shit collateral, in my opinion, as the stock market crashes, and I'm probably betting that Pantheon is believing the same thing, and that at some point, either before, during, or after, we're going to see a run-up of meme stocks that begin to skyrocket, much like we did in the months immediately preceding the January 28th and January and June of 2021 run-up, where you had stocks like Ocugen Inc. run 5,000%, BioNano 2,800%, and so on. You know, I've shown this to you in the past, so I'm not going to show this to you again in depth. We're not going to go through the whole thing, but many, many stocks ran thousands of percent, hundreds of percent in the 5 to 10 days after the AMC and GameStop debacle. And that was, meanwhile, they were trying to get control of things. If things lose, if these banks and market makers and the Federal Reserve are able to let this puppy ride because there's no other fucking choice but to crash the markets to halt inflation and begin without causing a major recession, which is going to fucking happen anyway, but that's the goal. The soft landing is almost impossible, as we've seen in the past. What does it mean? They've lined everything up for a stock market crash to cause all of our military members, millions and millions of people, to be stuck and unable to sell their fucking 401K's while the market crashes. That's liquidity that they have locked in to the financial markets. liquidity that banks cannot be robbed of because they're going to be so desperate for cash. I think this shit's coming. I don't fucking know for sure, but I think this shit's coming right at us right now. One day at a time, and it might take another month or two, but I would be shocked if it doesn't happen in this time period. I'll be fucking shocked if it doesn't happen before.
Yeah,
June
I was
3rd,
gonna
2022.
say. I'm sorry.
Go ahead, brother. Take it away.
Nah, I was gonna say to add on to the whole military thing. It's like,
Steve.
you would think that like we're, a lot of people haven't been paying attention and whatnot. But me, it's just alone. Like, I travel around a lot, and just hearing background, conversations and whatnot. Like, I'm hearing people going, "Oh man, did you hear about that GME thing and that AMC stuff? Oh yeah, those guys are kind of dumb." But in reality, I know for a fact that the same dude that was saying something that it was dumb, I know he's got shares in it. Like, he can't. It's like, bro, you were just talking about this with me not too long ago and showed me this. So I'm like, nah, bro, you're not. It's like, people are not. I don't think that. And this is just my opinion. A lot of people are listening. A lot of people are paying attention on the military side. Reason why, and I say a lot, but I'm not saying that all.
Well, as a military member, I would say you would know. Go ahead.
Right, and I'm not saying that everybody knows, but the ones that do, those are the ones that are like, they were not looking for this military gig to be something of a career. They were, some of these guys that went in because, hey, they didn't have anything. They didn't know what to do. They needed that, that 3 meals and a cot. You know what I'm saying? Like they needed it. And then they hear about this come about, and some of those guys jumped on because they believe in it. So there's a lot of people that I know is like, paying attention, and I commend those people. But the ones that are like, are well off and they don't believe in it. It's like, man, you need to open your eyes, look at the world. Like, just because you're in the military, you think you're, a lot of these guys think they're untouchable. Nah, man, it hits all the way across the board.
The banks don't give a fuck who you are. We're all fucking ants to them.
It's just like I tell people all the time. It's like, man, you think because you died that bills care? Bills don't care. Bills is like, yo, I'm still due. So when you gonna pay me? Like, you know what I'm saying? Just because you sick and you're at home, bills don't care. You still need to pay me. Like,
I want to pick up on that. Sorry.
Take it, Wolfie.
I want to pick up on that bit about people laughing. If you go and say to someone, these are just made up numbers, I'm not a financial advisor. If you go and say to someone, look, you could put $1,000 in this and you could turn it into 100,000, they're going to think you're crazy. But the thing I never ever forget all the way through this since last January, Michael Burry walked into these experts, people that work inside, people that know all the tricks of the trade and everything that goes on, JP Morgan's and these other banks. He walked in and asked them to short the housing market, and they laughed. These are experts. They laughed.
They didn't know
all of
shit.
them. Exactly. They laughed and they laughed. These are experts. These ain't your friends or some of your family or people that come on Twitter and come on Discords and start putting stupid comments in. These ain't them. These ain't uneducated people. These are supposedly the smartest people, work in an industry. You think they'd know it back and forth, get paid hundreds, if not hundreds of millions. These people laughed at him, and I never forget that. They laughed until he was right. And all he did was, while he was waiting, was bang the drums. He didn't give a shit. He did his homework, he did his DD, he did all his research, he looked at the numbers, he read documents that these experts were too fucking arrogant and lazy to do. These experts that they'll bring on mainstream media to tell you everything's great, and while you're putting your money into Apple and everything else, they're taking theirs out.
Experts like
so
Jim
the reason
Cramer.
they don't ever tell us is because it would all go to shit. The reason they don't tell you is also that they want you to keep putting your money in. They want you to hold. They want you to buy the dip because they're creating a dip and moving their money out. Hathaway, I'm sure last year, April, May, June, whatever it was, took his money out. Of course he did, because he sees what's coming, but he ain't going to tell you. So if you're running a hedge fund, what would you do? I'd look at the number one account. Listen, the market's looking pretty crap. We're going to put it to one side, your investment, and then when it drops, we're going to jump back in, but we're going to get some puts. We're going to short. We're going to do this, that, and that. We're going to be all right. but we're not going to tell everyone else. Do you remember Congress when they had the top banks come in and give their congressional hearing on the crash of 2008, and they were saying to each other, that was absolute dog shit. And then another memo to the whole company, all their salesmen, their experts, sell this, sell this, sell this. We've got to unload this, sell this to all the public. But you're ringing up your broker and saying, look, I've got some money, got a 401K, where can I put it? Yeah, buy this. We're only there to buy the stuff that they don't want. We're only there to buy it when they're selling. We're only there to buy it so that they can get out. It's not a free fucking market. It's rob the poor. It's rob the working class. It's keep everyone under control.
Meanwhile, you got guys like Jim Cramer and Marcel Kalinovic saying, buy the dip, buy the dip.
Yeah.
Come on. Come on. People are fucking still eating it up, saying this has to be the bottom.
And over 10 years, they can do that, because over 10 years, the market ain't crashed in 10 years. It drops, but that's a dip. Well, if you go and look at Burry, he made more money during market crashes than he does the rest of the time. So do they. Because they see it coming and they're preparing, they're positioning themselves, they're moving things around, they're juggling. But they know that's going to come to a stop. And when it comes to a stop, they're going to be less hurt than what we are. Inflation hurts us more than it hurts them. So all this bullshit I keep saying about inflation, it's us. It doesn't affect them.
A lot more.
Oh, they put it into the market.
They had to cut inflation when it started affecting rich people. When was that? When jet fuel prices skyrocketed.
Mm-hmm.
That's when they put the fucking brakes on the oil run. It's all a big fucking joke to these guys. We're nothing to them. We're nothing to them. We've got to do everything we can to hedge ourselves for what's coming. And it's going to be a bloody fucking earnings week. A bloody fucking earnings week, in my opinion, to help push things further down. That's all it's going to do. And this isn't something that we've just come to the conclusion all of a sudden. This is after months and months, if not years, of due diligence here since 2008. Because the housing market's been propped up since 2008. And stocks and quantitative easing has happened, and bonds have been propped up since 2008. Hedge funds and banks have been over-leveraged since then. Mortgage-backed securities have been used to abuse real estate since then. And at the same time, we continually reminded that there's funding risk and aggregate liabilities are vulnerable to runs that are increasing and have now reached the level of over $18 trillion of vulnerability in liabilities, equivalent to about 80% of nominal GDP of the United States. Some types of money market funds, as well as other cash management vehicles, remain vulnerable to runs, and bond mutual funds continue to grow rapidly and remained exposed to risks due to their large holdings of illiquid assets. Stablecoins can suffer from structural vulnerabilities, and their market cap has grown about 5-fold over the last 12 months. The Federal Reserve, Janet Yellen, the U.S. Treasury, the federal government, period, continues to tell us every fucking day, every week, every month that there's problems coming. The IMF has told us that there's problems coming. The International Monetary Fund laughs. As a matter of fact, I've got a video from the director of the IMF stumbling her way into talking about inflation when she wasn't supposed to. Check this out.
Madam MD.
Look at this. You know what? You guys in the Discord, just hang tight. Give me about a minute. I'm going to play this right now.
Yeah. Madam MD.
Don't say anything for about 2 minutes.
I think we are not paying sufficient attention to the law of unintended consequences. We take decisions with an objective in mind. And rarely think through what may happen that is not our objective. And then we wrestle with the impact of it. Take any decision that is a massive decision, like the decision that we need to spend to support the economy. At that time, we did recognize that may lead to too much money in circulation, too few goods, but didn't really quite.
She just mentioned she wasn't supposed to use the word inflation. She started laughing because the director of the IMF couldn't say the word inflation and had to stumble around it and said the definition of inflation instead.
Too much money in circulation, too few goods, but didn't really quite think through the consequence in a way that upfront would have informed better what we do. And I subscribe entirely to what Christine said about climate shocks. We are already out of time. And the fact that whenever something hits us, we forget about this other crisis is incredibly troubling. The fact that we are, I'm sorry I'm going on here, but I'll finish in a second. We act sometimes like 8 years old playing soccer. Here is the ball, we are all at the ball, and we don't cover the rest of the field.
That's fucking pathetic. The IMF director told us that we're behind the fucking curve on inflation. We're over here chasing the fucking ball. Meanwhile, the rest of the team's already made a move to get it past us. Bunch of fucking 8-year-olds. She literally stated that they're all a bunch of fucking morons. Look at this fucking simp over here. Look at Jerome Powell. He looks so fucking silly.
Decision.
Oh, is this my fault?
The decision that we need to spend
look at him.
To support the economy. And at that time, we did recognize that may lead to too much money in circulation, too few goods.
We did recognize that it would lead to too much money in circulation and too few goods.
Didn't really quite think through the consequence in a way that upfront would have informed better what we do. And I subscribe entirely to what Christine said about climate shocks. We are already out of time. And the fact that whenever something hits us, we forget.
When she's talking about climate shocks, they're not talking about climate change and they're not talking about the weather. The director of the IMF is telling us that the climate of the global economy has shifted and we're fucked.
Forget about this other crisis is incredibly troubling. The fact that we are, I'm sorry I'm going on here, but I'll finish in a second. We act sometimes like 8 years old playing soccer. Here is the ball, we are all at the ball, and we don't cover the rest of the field.
That's fucking pathetic. That's absolutely pathetic. Come on and jump on back in here, guys. I appreciate you for giving me a moment to show that to everybody. I'll put out a short clip of that later on for people to see it and reference it without me speaking through it, so you can share it with family and friends or whatever. But I found that on Twitter, and it was just a couple days ago from the IMF director, and it's an absolutely sickening video, but it's something that we've already fucking known. They're basically laughing and joking about inflation and the fact that they're not supposed to use the word inflation. She's admitting that they're way behind the fucking curve and there's no real way to get ahead of it. There's no way to win this fucking soccer game, football game, call it what you want. What a fucking joke. What a bunch of crooks. Pantheon, you got anything you wanted to add, brother? Are you D?
I was going to say, just this time, everywhere is affected.
I agree. It's going to be a global crunch, man.
Be lucky if it was anything like 2008, but
that's what people fail to understand so far. They think it's been a soft landing. They think the market's correcting. The NASDAQ hasn't seen shit yet. The S&P haven't seen a damn thing yet.
Bro, I want to say this one last thing, and then I'm gonna go to bed. And it's kind of crazy that I'm saying this because I don't know. Maybe I'm just demented in my own way, but this chaos, I'm kind of excited for chaos. I don't know why. It's kind of like one of those deals. Like it's just about time this shit's happen. I don't know.
You're excited for chaos because you know the fucking markets are overvalued. You know real estate's way out of control. You know the stocks and fucking FANGMAT stocks shouldn't be at these levels, but they are. You know that overvaluations are bullshit. And I think we've all had about enough. We're ready to move on. We're ready to fucking move on and get our fucking money. Jerome Powell, where's my fucking money? Ken Griffin, I want my fucking money.
Show me the money.
Get the goddamn money printer out.
Put some hot sauce on my burrito, baby.
What the
And we've all got to remember, guys, knowledge is power. You know, we've got probably 10,000 people that are going to see this video. We've got over 3,500 people in this think tank, right? We've got knowledge that's being spread. Look at it that way. This isn't about trying to freak people out and scare people. This is about you guys getting this message helped spread out. The more we know, the more we can prepare for this, the more we can hedge for it, the more that we can be prepared to save our attendees and help those that are in our families and our loved ones, right? That's the point of this, guys. Knowledge is power, and we know now.
For this is for the people that have never paid attention. This is your chance. So it's quite a simple way of thinking about it.
This is your chance,
If
right?
we're wrong and you do nothing, you lose nothing. You just carry on exactly as you are. If we're right and you do nothing, what does that mean? And that's what we're trying to get across to you. It's not you have to buy this or you have to buy that. Just answer that question. Forget everything else. It can be complicated. It can be overwhelming. You're busy. You've got responsibilities, worries. Just ask yourself that question. If all these people you've been told to ignore are wrong and you do nothing, nothing changes. If we're right and you do nothing, what happens? And that's what scares us. It's the fact that there's going to be millions, hundreds of millions, a global problem like none of us have seen. I'm 50 years old. I haven't seen what I believe is coming. And that scares us because that's us. That's the 99% yet again going to pay an horrendous price. They won't lose their planes. They're not going to be selling their art. They're not going to be suddenly earning 50 grand a year or 20 grand a year. It ain't them that's going to suffer if we're right. It's everybody else. And that includes you. If you haven't paid any attention, ain't seen any videos, ain't listened to anyone, we ain't telling you to buy shit. We're not financial advisors. We're just asking you to have a look.
Have a look into the synthetics. Have a look into the shorts. Have a look at what fucking happened in January of 2021 and June of 2021. And what the fuck's going to happen with this next executive order come June 3rd of 2022 and in the weeks preceding June 3rd, 2022, because it's not going to just kick off in one day. We're going to start having little run-ups, and you're going to see a bunch of other YouTubers out there running around saying that the squeeze has started, the squeeze has started. You're going to have to figure out what's really going on. Guys out there that are bullish on the market on YouTube, a lot of them weren't trading and weren't working in 2008 during the financial crisis and the real estate crisis. They have no idea what was going on. They've lived their entire lives in a bull market, and that shit's over. It's time to be real. It's time to stop lying to yourself and prepare for what's to come. And in my opinion, what's coming is that billions of people are going to lose their 401K's, their military savings accounts, their military 401K's, the TSP accounts, their IRAs, their ISAs, their non-self-managed money accounts, and a small select few that have done the due diligence in meme stocks and precious metals are going to be in a position to take advantage of a crashing market. And we're going to be so fucking rich.
Woo! So goddamn rich.
Get the goddamn money printer out.
Blah, blah, blah. Let's fucking go.
Let's
Money,
go. Come on, motherfuckers. Are you excited or what? You want to see this executive order or what? Let's see this shit fucking kick off, man.
Hell yeah, boss.
Crash this fucking market already, Jerome Powell. Janet
Jerome
Yellen.
Powell, get fucked.
Oh, Yeller. Get the goddamn money printer out.
We're gonna be rich by executive order.
Hot sauce on my burrito, baby.
Cash, what'd the president say?
We're gonna be rich by executive order.
God damn right we are, motherfucker.
Go cash money.
Yeah. T.
T, man.
T, you're gonna be filthy, stinking rich, buddy.
You're an original, aren't you?
Yellen, give me the fucking money.
Yeah, Taylor's gonna have all the toys.
Big shout out to Randall Cornett. Big shout out to Pantheon AMC. Shout out to Cash Money, everybody in the think tank. Wolfie, Zoombach, thank you guys very much. Beast Mode, appreciate you guys. All the mods, and everybody on YouTube, thank you very much for your support. Thanks for joining us.
Appreciate you, brother.
Thank you, boss.
The bounty hunter.
We're gonna be so fucking rich. Get the goddamn money printer out.
See, I
Well
even
done.
interacted a little bit more.
Yeah, you're good shit, man. You guys are awesome. Thank you, everybody that's still here watching. TMI's baby mama, Danny, Manuel, Dana, Killing Joe, Deborah, Hayden, everybody. Thank you so much for your support. We truly appreciate you. I cannot state that enough. Thanks again to Pantheon AMC. Make sure you guys follow him and watch his long-form radio podcast on YouTube almost every day. Thank you, Javi, Stacia, everybody. You guys are the best. I am absolutely humbled that you people want to listen to us speak. We are glad that you guys are able to take the information and do whatever you like with it. We're glad to be able to help. Hopefully, it helps make you filthy, stinking fucking rich.
Yes, sir.
Peace out, everybody.